Hey guys, I'm Jen. Welcome to another episode of Blockchain Banter Trading Crypto. I'm here with Keith Allen, co-founder of Material Indicators, TA and algo trader, order book analyst, and Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Thank you guys for joining me. I love these calls. I love everything that we discuss. Keith, I think maybe we'll just kind of stick with the usual. If there's nothing specific you guys really kind of want to draw attention to in terms of ETFs and things of that sort, then maybe we can take a look at the fire charts, talk a little bit about material indicators, what it is that you're seeing, in the order book, all of the good stuff that we look forward to every Tuesday.
Yeah, and since you just mentioned the ETFs, I think that the ETFs speak to kind of the broader fundamentals and really kind of a macro perspective of the market. Like when there's interest in ETFs and when there's not interest in ETFs, and you have to wonder when price is moving the way that it is this week, and as it has through the month. How things will go, and there actually has been some pretty robust buying on the Bitcoin ETF side recently, and conversely, those ETH ETFs not doing so good.
Why do you guys think that is?
Mark,
You think
I'll
there's
let you
just
take
not
this.
as much of an interest in ETH institution? Like what we thought Bitcoin ETFs, that was going to be like the movement, right? And then I think a lot of people just thought that once this was available, ETFs was just that was a, I mean, like I said, kind of the movement, right? All of a sudden it was going to start seeing all of this adoption, and it meant that there was this demand.
Well, there was 10 years of
Right.
pent up demand for the Bitcoin
Bitcoin,
ETF, right? They had been trying to
right?
get that passed for 10 years. Obviously, there was demand for ETH, but Mark, maybe you can speak to this just on the dynamic between the overall market interest in Bitcoin versus the overall market interest in ETH.
Okay. In terms of market interest, I'm not sure how much I'm going to be able to comment on it because, like I've said before, I'm not even certain that there is that much like institutional relevance in cryptocurrency. Bitcoin certainly more than the others, but it's still relatively thin on the ground. Having said that, the Bitcoin ETFs have had an enormous amount of traction, and that's like very nice to see. But Bitcoin is also like an extremely sort of risk-on asset that always promises to make these enormous moves to the upside. And I think when cast your mind back pre-January and think about the kinds of otherworldly price targets people had after the Bitcoin adoption, after the Bitcoin ETF adoption was going to finally arrive. I would say that I didn't see a single price estimate below 100K and upwards of $1 million per Bitcoin. This is the promised land that Bitcoin enthusiasts have always been, shooting for. And what happened? The price went up. So around that time period, I remember Bitcoin is fluctuating sort of around the 40K-ish sort of price level. And so, it's not a bad performance for an ETF. Since the time it was approved, we're still up about 65%, somewhere in that vicinity, depending on where the price is. But compared to what people were promised, it's pretty disappointing, right?
Now,
I
I'm
know
promised
people.
you mean by your favorite influencers or your favorite,
No, I'm just saying that
traders and
people,
things of that sort.
people
Projected,
just
maybe.
not even projected, just that people were promised a 1 million X, or a 100,000 X, or a 1,000 X, or a 10X, because Bitcoin has been doing these kinds of moves without an ETF its entire life. And then when the ETFs finally get here, it's a 65% increase? Like, no one gets out of bed for a 65% increase on Bitcoin.
Well,
And I
I
think
was
yeah, I mean, I know that that's an unrealistic expectation for sure. And I'm not advocating for the fact that these were healthy or reasonable expectations for a Bitcoin ETF. But what I'm saying is it has soured how people feel about them, because now they're thinking, oh, what, a 65% up? I think that level of disappointment has meant that now any other ETF approval for any other, digital asset is going to be met with the same kind of, let's say whatever that symptom is that people have when something is overpromised and underdelivered. When people hype up a film for me and I finally go and see it, and it's not that it's a bad film, but it was nowhere near the expectations that I had based
It was
on
overhyped.
running it. Overhyped. And I think the Bitcoin ETF was massively overhyped. And even if the price had remained completely level, that would be Bitcoin outperforming almost every other ETF that's ever been. These things generally take years and years to develop some momentum. And Bitcoin price actually went up. I was predicting a downwards price action just because on the balance of probability, historically, ETFs have always been bearish, no matter what asset they're for.
I would argue that the 6 and 7 figure price targets, those dream targets, are still very much alive for the Bitcoin community. What the big difference is this market is notoriously impatient, right? And if there's one thing, probably the biggest lesson I've learned this past year, patience.
Yep.
None of this works on our timeline. Mark, you and I have been looking for a correction, a 20%, 30%, 40%, 50% corrections since we left 25K. All right. It's taken us until this month to get that correction to 50K.
Yeah, exactly.
Right?
But I think what I'm saying is that the price is going to do whatever the price is going to do. Right. And when Bitcoin does get to whatever these 7-figure targets, I'm sure there will be people saying we could never have done this without the ETF. I'm completely in the other camp. The ETF is just an ETF. Like, I don't care about it. It doesn't matter at all to anything. And historically, like I said, Bitcoin has achieved everything it's achieved without an ETF. And so now that the ETF is here, it's like, okay, fine. Maybe it's reaching a broader demographic now. And maybe this is important for like scaling Bitcoin because it gets, you have these logarithmically diminishing returns. As the size of Bitcoin improves just in terms of its market cap, but also the number of tokens in circulation. And so you might actually need to access a wider demographic in order to support that. But I don't think that it's, this catalyst that's going to take anything any higher. And I've always, I think I've defended that position pretty consistently.
I think I tend to agree that Bitcoin is going to do what it's going to do. And that things like that are catalysts for volatility, whether it's the launch of the ETF or whether it's missiles being fired, to and from any particular destination, those are speed bumps. Those are peaks and valleys that give us our intra-week, intra-month, intra-year volatility. But at the end of the day, if you zoom out to a long-term chart of Bitcoin, and heck, let's do that. Jen, I'll go ahead and pop into a screen.
Sure.
And by the way, this is the ETFs for the past few weeks, and especially Friday after Powell made his comments. I mean, like after the first sentence came out of his mouth, the market responded really well to that.
Keith, we had touched on this last week, and we were saying that this was coming up. What was the result of that?
So the results
once you started speaking,
the results were that, and interestingly, he didn't take any questions after this news conference. He said that it is clearly time for a change in policy. I'm paraphrasing, of course, but time for a change in policy, basically alluding to starting a series of cuts in September, and that, and this was a key part, that spikes in unemployment, they are not seeking and do not welcome spikes in unemployment. So if we reverse engineer that, leading up to this point, the Fed, despite what they told you their dual mandate was, they wanted to see an increase in unemployment to start cutting. It's just it's a benchmark since the beginning of time. When unemployment starts to spike is when the Fed historically has made cuts. So we've seen a little blip in unemployment from 3.9%. I think we're now up to 4.2%, something like that. And it's likely going to continue to edge up. The question is it going to spike? Are we going to see a 5 handle or more? Or are they going to be able to navigate into a softish landing and do that through a series of incremental cuts that navigates this thing into a softer landing, which would keep the economy strong, and potentially the market would love that, versus an oh shit panic of rapid, large cuts happening very fast and indicating that we're trying to avoid a hard land, trying to avoid that crash landing, which is the debate going on across the market. But the market is certainly baking in these rate cuts already. We're seeing the target funds rates come down, and so we'll wait in September. Is it going to be a quarter point or 50 basis point cut? That remains to be seen. And I was really kind of leaning towards the fact that I thought a bigger cut would indicate more concern. But at this stage, after hearing Powell's approach on it and hearing some economists who have far greater insight to this than I do, maybe that wouldn't be the worst thing. So we'll just have to wait and see. Nonetheless, it speaks to the fact that the market likes that news, and we saw it instantly in that candle on Friday. This was Friday, right? So we had all these death crosses that we had talked about in the previous shows. We had all these death crosses happening here, and a lot of resistance up against this 50-day moving average. And I'll go to the cleaner view of it. Lots of resistance against this 50-day moving average. And this one candle, I mean, this literally sprouted a celery stick as soon as Powell opened his mouth. And we reclaimed the 50-day, the 200-day, and the 100-day in one shot, even wicked past this mid-cycle top. Things cooled off over the weekend. We hovered right around this 21-week moving average. That's a really important one, in my opinion. Hovered around this and that 2021 mid-cycle top. For those who don't remember what that is, see this red bar here? That is kind of this consolidation zone, and here is that mid-cycle top right here, which a lot of people think was the true top of that 2021 market before we got this dump and this manipulated distribution rally. So what I'm looking at now is, we have a monthly close. I think I told you offline before we started this, I'm really focused on the monthly here at this point. And you can see we have what appears to be a doji hammer formation here in this candle. Now it's still early. We've got 4 days left before the monthly close. So as we're seeing this retest of support right now, we could conceivably go back down here. And if we close down here, that's going to invalidate this doji hammer, right? It's going to change the dynamic structure of this candle. However, if we get this little dip down into the 60K range where we're at now, and then recover and close closer to this mid-cycle top, possibly even above it, which would be very, very bullish, or even in range of it, gives us a shot of moving in there in September and perhaps more likely in the fourth quarter of the year. So
the
this
monthly close.
Monthly close.
60.
Monthly close.
Mm-hmm.
Monthly close here. So last month we closed at 64,600. All right. You see this mid-cycle top is at 64,895.
Yeah.
So that basically means we need to be above that 64.6 candle level to get a green close. I don't care if it's green, but I'd like it to close up here. And I'd like it to close the weekly above this 21-week moving average. That's going to come a couple days after the monthly close. But if we could close up here, and especially if we close above that mid-cycle top, then we have a better shot at going after this. Now, Mark, you see Mark is kind of in darkness there. He's got his sunglasses on because he is a bear in hibernation. And so he doesn't really want to see the light. And so Mark wants to see things come all the way back down to here. And that's not out of the question, right? We've got a 200 week moving average down here in the high 30s. Now, if things break down from here, and that's really what we're watching now on these retests, right? So we wick through this 50-day moving average, and this is really important in my opinion, because and to that guy a few weeks ago who said maybe I don't remember if it was here or just to my own channel that somebody said moving averages don't really matter anymore. How could you say that? Look at all the times that we interact with these specifically, right? I mean, they
Why
really do.
would he say that?
They get overshot a
Is
lot.
there-
There's no question about that. But I disagreed with him on that. I think that there's a lot of validity to these moving averages, and just like you see resistance here, we have the same issue with support here on the dailies. So the fact that we spent so long trying to reclaim this 50-day moving average, and now we've lost it, that's not necessarily a sign of strength. However, I'm going to lean on two things. One of my favorite old adages: straight lines are not sustainable, and that holds for both directions. Okay, see this big giant candle here? That was what, 12%, and it retraced partially. Same thing here. This is only a 6% candle, but we're getting some pullback. Not saying that 6% candles are not sustainable, but in this case, well, it's clearly not. And the same thing goes in the other direction. Look at this candle that went down to 49.5, and boom, we bounced from there. So the next target here is the 21-day moving average. That's just above 60K. And here's where it gets interesting for me, and here's why I've been expecting this move to happen here through most of the week. I am going to share this Kingfisher liquidation map, which I've grown pretty fond of here. Let's get a refresh on it. Through the weekend, none of this existed here. Okay, these are leveraged trades on the north of price. These are shorts, and on this side is longs. And so I was expecting to come back and clean these longs, right? Liquidate these guys down to 59K. The hot spot here is at what, 60,750-ish. And so I've been expecting this as kind of the low-hanging fruit. And then yesterday, after we had that rejection from the 21-week moving average, around that time, this developed. So now we have a short liquidation event that's pretty close, and that's around 64 and change. And this long liquidation down at 59-60K range. So I could very, very easily see this happening as we head into the close. We always get volatility. I don't like to use the phrase always or never or 100%, but we frequently see volatility around monthly closes, right? And this one seems to be no different at this stage. So imagine if we go clean this and then come back and sweep this for the close. We could still do this, and that would still have us hovering at this mid-cycle top. Whether we close north or south of this line on the monthly remains to be seen. I would say, knowing how Bitcoin likes to behave and taunt us, that I wouldn't be surprised if we close just south of that to let us speculate further for another month of whether we're going to make it back above or not. That's kind of what I'm looking at just on the technical side. And then, of course, we'll look at fire charts, and we can see that we have had some interest to buy here in this range. So, yes, price is breaking down, but there's still buyers. And why are there buyers? Anyone? Bueller? Why are there buyers right now?
Bueller.
Ferris Bueller? Anyone remember that movie?
Oh, I
I
do,
remember
but
that
I
movie.
don't well enough. I do, but I don't
Of
well
course, I
enough.
remember that movie.
Okay. So this may not be a popular opinion. Maybe it is.
Okay, we
I
like
guess it
these
dep-
unpopular
as I
opinions.
know it's not going to be popular with Mark, but let's look at the 1 year view of what has been happening. All right. We can see that we still have strong liquidity stacked above 70K. And we've shared many, many times before that these bright spots tend to be reversion points, right? Until there's enough to push it higher. And so we need to see more strength. We have good depth down here, down to sub 40K levels in terms of liquidity, bid side liquidity laddered. But what we don't have is a deep concentration up here close to the active trading zone, right? So until this can, this is eroded a bit from where we were, right? And maybe this continues to erode by, raining down on price. But until we see a bright spot on the bid side close to the active trading range, I don't expect to be able to sustainably take this out. However, we have said many times also that purple whales especially dominate Bitcoin price action. Here's the two largest order classes. What have they been doing since Christmas Day? This is a CVD. It's order flow. Up means buying, down means selling. What have they been doing since Christmas?
Buying.
What's another word for buying in crypto? Accumulating.
Accumulating.
Right. So, based on what I'm seeing, and not just in this data, but other data as well, it seems that these larger players are accumulating. And because we now have some history under our belts and we know how volatile Bitcoin can be, and regardless of what camp you sit in today, of what the long-term price of Bitcoin will be, right? Forget this year's price. Forget this cycle top price. If you are of the belief that Bitcoin will someday be a six-figure or seven-figure asset, do you care if you're buying it at 60K or 50K or 40K? For retail traders, yeah, perhaps. But for big money traders,
They're
do they
dollar
care?
cost averaging across the board.
Right, they're dollar cost averaging. So if you take a little bit at 60 and you take a little bit at 50 and if we go lower, you take some at 40, as long as you're not leveraged, you're building a long-term position. And that's for people who don't need this money to pay rent next month or this month. That's for people who have a long-term view. Okay. Look at Michael Saylor. I don't endorse what Michael Saylor does. I think I think what he preaches is irresponsible for retail traders. But he is 1000% all in. And that may or may not be, it's helping him out right now. Right now, it's making his company very, 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 very profitable. How that ends, we don't know. But that mindset, and I think this is the same mindset of the institutions, is that, hey, we're in this for the long haul. And over the next 5, 10, 20 years, where's Bitcoin going to be? The expectation is it's going to be well above 70K. And so, I have been trying to improve my position, my cost basis by, holding some of the things that I bought very early and adding to that position incrementally in our consolidation ranges. Most recently, for the past several months, I've been trying to just, scalp a little bit here and scalp a little bit there and try and improve on my cost basis. But I would tell you that way more often than not, I'm not able to buy back in lower, right? I'll have a position. I will go to, see price starting to decline and put a trailing stop loss in to protect the, at least some profits in it. And then it will close right below my stop loss, and which is profitable, mind you, but I'm looking for more to go buy back in cheaper. And more often than not, I'm not getting that opportunity, at least not as low as I'd like. So maybe I get that opportunity today. So yes, do I have some portion, some positions right now that are underwater? Yep. Am I concerned that they are going to get liquidated? No, because I don't use leverage. So at this point, it's just a matter of managing my own risk. And those positions are relatively small compared to the remainder of my portfolio. If I close them all now, even though those individual positions are in the red, I would dollar cost average into a profit. So I'm trying to improve on this. About 20% of my portfolio. I'm trying to improve that narrow part, really kind of the top. And so I'm letting it go right now. I think that we're going to go to this 59K. And if we don't, right, if that doesn't hold and we go lower,
You think before the monthly close, it's going to go down to 59K
I
back up?
think 59K, I think is, well, it's so close, right? I'd be pissed if we didn't go get it now. But if we don't get this now, we're probably going to go back to it, unless of course price just moves up and these people close their trades because they take profit. So as long as this is there, I think it's a target, just as I think this is a target. So both can happen in the next 4 days. That's not out of the realm of possibilities. That's not a crazy range. Both are very much in reach. So yes, I do think that's a possibility before the monthly close. Go hit this and then go get that, or vice versa.
Keith, earlier you were saying Bitcoin's going to do what Bitcoin's going to do, right? We see this. I mean, there are some unexpected moves that come in, but then we also talk about, inorganic, or, I mean, that's kind of the best way to say it, right? Without saying it, movements or bids and things of that sort, right?
Right. You mean
So
manipulation?
Yeah.
Is that the word you're looking for?
Yeah, it was the word I was avoiding, but yeah, I mean that's the word I was
Sorry.
speaking about, right? But no, I mean, how much of this comes back to like Bitcoin's going to do what Bitcoin's going to do, or like this is really why we're looking at what people are trading. Where are these liquidations going to occur? Where are the bids and the asks and the liquidity and the trading volume and everything else, right? Because you're looking at the two largest classes. I mean, for anybody who isn't familiar, we're looking at the purple and the brown. And what amount do those?
What amounts do these
show?
represent?
Yeah.
Okay, so mind you that this is only market orders, and it's on one exchange. It's the largest exchange. It's on Binance. It's the largest exchange by a lot. But so this isn't an aggregate. This isn't an aggregate of the market. This is on one exchange, and in the grand scheme of things, it's not a ton. It is. I've zoomed beyond the view. In the grand scheme of things, let me turn on all these order classes so you can see who's doing what. Now, we can, in the beginning, this yellow class of $100 to $1,000 orders was clearly retail. Nowadays, it's clearly not just retail. Yes, retail lives there. But these larger classes, whales can utilize any other order class, and they do. Sometimes it's to disguise their intentions. Sometimes it's merely because of the dynamic in the order book. They need to place smaller orders so that they can mitigate their slippage. Okay, so here we can see that in the past year, the market has net market sold $3.5 billion, and that's made up of these 5 different order classes. Of that largest class, and this is why I say that brown mega whales, even though they place the largest orders, they don't do the most volume. 161 million for brown mega whales, a little more than $500 million for purple whales. That red class really came on strong this year. I call them sharks, $10,000 to $100,000 orders. They really came on strong as we were speculating on the ETFs. You can see they had started buying early
Yeah.
and really, really ramped things up through March. And since then, it's been profit taking. So they've sold at this point. Let's see on the normalized view, it's easier to see. That red class has sold roughly 50, almost 55% of what they bought up through March. Meanwhile, these purple whales have only sold about 5%, about 40%, 35% of what they've sold. And brown whales have sold about 20%.
Okay.
Wait, my math is horrible. Did I 965?
Where's Mark on this? Mark is
Yeah.
our math guy.
Yeah.
I don't know why he's letting us fend for
Yeah.
ourselves.
No.
out here when
I
it
was
comes
right.
to
I was right the
math.
first time. They've sold purple whales have only sold like 4%, not 35%, only 4% of what they've sold, of what they bought rather, and those brown mega whales about 20%.
So they have an effect on the market, and it shows you, I mean, it can give you some indication, right, of what some of the bigger players are doing or what they're seeing or what they're expecting to happen, but they're not having as big an impact as it would take to manipulate the market.
Well, one of the
Am
things,
I right in saying that? Or
well, I mean, when manipulation happens, it doesn't necessarily have to be big orders. I mean, a $10 million
fair.
a $10 million block of liquidity can move the market.
Yeah.
And it often does. All right. I mean, look at there you go. That's not what I meant to do. Come back.
Well, we're waiting for the.
There we go.
Here it is.
I was just going to say, this is, doesn't take a lot to move the market. This block right here is less than $9 million. Okay. So we see this move around all the time. What I was going to say is a lot of people are asking, well, if all this buying is going on, why isn't price going up? Anybody familiar with Mt. Gox?
I heard they
Everyone is
distribute.
familiar with Mt. Gox.
Billions of dollars, billions have been actively being distributed since July, and that continues.
This is one of my major gripes with the crypto culture in general, is that there's such a poor understanding of how volume and price action correlate with each other that it's really disturbing. But there is no law of finance or anything that says that you need significant volume for the prices to move, or that the prices should move with significant volume. In fact, it seems pretty counter correlated to me. In some of the largest moves I've ever seen have been on almost zero trade volume. Like that, it is true that the price can move even though not a single buy or sale has happened. And the opposite is also true. Sometimes you can sell an enormous amount of inventory at a single price, and the price doesn't move at all. Like it's up to the people who are interacting with these markets on both sides, right? Not just the people that are taking the book, but the people that are making it, to set the price. And there is, we don't need, like, if all of the market makers all at once decided that they were going to set the price of Bitcoin to $1 billion, then Bitcoin would be trading at $1 billion. Like, it wouldn't stay there very long because everyone would take that opportunity to sell into it. But that's the truth of it. Like, the price does not necessarily need to move as a function of volume the way it does on AMMs, right? When you have a centralized order book, the price is whatever the person who is quoting a price says it is. And if they decide that it's not going to be correlated to volume, then that's their prerogative.
Well, I'm going to tell you right now, if they set it to $1 billion, I'm going to front run the fuck out of that at 975 million.
Of course. But you know what I mean? It's like when people say, who is selling here? And sometimes the answer is no one has, but that doesn't mean that the price isn't going down.
Listen,
You don't need
there's
to
always
you don't need to
there's
wait for someone to sell to mark the price out. People will
right.
mark the price out no matter what.
And we also have to delineate between long-term investors and traders. Okay, so even within these order classes, these larger order classes that I'm talking about, yes, part of that is investment capital, and part of it is trading capital. And you know, I'm often asked, how come Brown? You know, is Brown waiting to buy lower? How come Brown doesn't seem to time it right? You know what seems to be one of the most important things for when those mega whales are making those big orders? It's when they have liquidity
Right.
very close by, so that there's not slippage. And look at this example. Look at this series of one buy order and a series of sell orders. Right?
Yeah.
They bought into liquidity here, and they sold into liquidity, sold into liquidity, sold into liquidity, so that they didn't have slippage. So that's really that's the dynamic behind Brown.
Yeah. I remember you talking about this too, breaking them down into smaller orders because of the slippage. Mark,
Yeah.
I don't know if you have something planned for us specific today, but I want to give you the opportunity to share your screen as well, if so.
Yeah, sure. Let's do that.
Keith, do
Let's
you
gonna share
want to add anything here before I kind of turn it over to Mark for the time being?
Haven't I done enough?
I don't think
I
you can
can't
ever
get
do
enough.
enough.
I know. Okay, let's see. I'm going to remove you for now. Thank you for going through that with us, Keith, by the way.
Always
I'm
a
interested
pleasure.
to see how future ETFs and things play out. Like I see the talk of Sol, you know, like a Solana ETF, and you know, high hopes in the Sol, like the Solana community right now. Also, I speaking of Mt. Gox earlier, that's what I was looking at when my head was down. Mark, I wasn't looking to be rude to you when you were speaking, but there was a tweet I had noticed, and it was Mt. Gox casually repaid 92% of creditors, and we're still at 61,000. This was about 5 days ago. So
So the
I
fact,
don't
I mean,
know if,
the fact that price has stayed in this
yeah,
range while that's going on speaks volumes to me.
right.
And,
There's something to
and
be
the
said about
ETFs
that.
and the ETFs are going to be good for that. Like that actually, like one of the things I think Keith and I agreed on way back before the ETFs for Bitcoin came out was that it should mean, everything else being the same, that you can move a little bit more inventory than you would have been able to beforehand, just because the markets should be a little bit more liquid now. And that's going to be good for things like Mt. Gox. It's going to be good for, you know, things like the Celsius liquidator and things like the you know, the FTX liquidator and so on. So I wouldn't expect, you know, the same kinds of price shocks that we would have seen before. So I may have exaggerated a little bit when I said that the ETFs don't matter. I do think that they make the market slightly more liquid, which should mean that the price volatility is slightly tempered. But, you know, on long time scales, I'm not really sure how that's going to play out.
Yeah. Mark, I'm going to bring up your screen, but I see us on your screen.
Yeah,
So
that's
what
fine.
is it?
It's just because I want to jump around between different tabs. And so if
Okay.
I'm showing a single tab, then it's going to be difficult. But yeah, I wanted
Yeah,
to just a couple of things to
okay.
add, some color, I think.
I
I've spoken
love
about,
Benjamin Cohen, by the way. I'm
yeah,
such a fan of his.
everyone knows
Yeah.
Bancor. And you know, I don't always agree with him. He's a, I don't think that he would say he is, but he's like Bitcoin
BTC
maximalism
Maxi.
leaning. Yeah, like I think he's a little bit, you know, I know what BTC maxis are like, and Bancoin is not necessarily
Right.
BTC maxi. That's not a fair.
He did
fair characterization.
I think he did an ETH analysis yesterday. You can't be a Bitcoin maxi and do an ETH analysis.
He even does Cardano analysis, so he offends everyone.
As long as he's an
but
equal opportunity offender, then there's no problem with that.
exactly, it's I think one of his best shortcomings. Anyway, you know, I think that this tweet came out like it basically exactly the right time. Everyone needed to see it. So this was, you know, about a week ago now, and it's just basically showing, and you know, obviously where Ben applies his cuts to the price chart matters, but at least he's consistent. He generally measures it from, you know, what is now considered to be the market bottom, and so the more time goes on, the more easy it is to find out where the bottom was. And certainly for the, you know, for previous bull cycles, that's very easy. And now that we're sort of, you know, getting deep into this one post Bitcoin halving and so on, He basically just takes what is the ROI in the price chart from the market bottom, and overlaying the previous two cycles. So you'll notice here market cycle 1 and market cycle 2 aren't displayed, but market cycle 3 and market cycle 4 are there. Market cycle 4 being the one up until the end of 2022, and then market cycle 5 being the one that we're currently in on this pink trace. And they're tracking pretty much the same as always. Obviously,
Mark, do me a favor. Can you
Yep.
click on that image to make it a little bit larger for everybody, or no?
Like
There
this?
you go.
Yes.
Yeah, I think that's better for our viewers. Yeah.
Okay, fine. So yeah, and so the point is that there's always a lot of drama, and I myself, I've said it for previously on these calls. I choose to remain sort of consistently bearish, at least until I get my some of the things that I do want to happen or think will happen have happened, and then I'm happy to change my perspective. But I think that being a bearish voice in the crypto world is not necessarily the worst thing. But then having a balanced perspective is also valuable. And so I wanted to point out that despite all of the stuff that I've said, and I know that I make some people upset sometimes when I say that I'm expecting a 50% capitulation and that kind of thing. And if you're in a levered position, or if you're really long on Bitcoin even without leverage, that can be an upsetting thing to hear. And so I just wanted to zoom out a little bit and show that had I been doing this call for years back in the other in these other bull cycles, I probably would have been saying more or less the same thing. And whatever, like where these traces are basically meeting in the middle, where we are exactly where we more or less should be or would be expected to be in this current cycle, compared to the others. One of the things that is, I think, remarkable about this chart compared to the other cycles is that you can see that we did overshoot a little bit. And you'll remember that when we first started doing Bitcoin trading calls, I was a little bit more neutral, and it's this let's call it divergence away. Like, I think that we got too bullish too quickly, and compared to the other market cycles, this is I'd say that this is a supported statement now. And so back here is where I really started to get bearish. And now that we're sort of crossing back in the middle here, maybe taking a little bit more of a nuanced approach, or relaxing my bearish leanings might actually be warranted. And if we cool off a little bit and start to move up the way that we did in 2021, then I think that realistically, I would say that that this chart is telling us that we probably are headed in that direction. Which begs the question, where do I think the top is? Well, could be, and when is it going to happen? If we listen to Ben, then we're going to expect it around about around about wherever these charts are terminating, and that's probably a realistic prediction. But notice that there's this accounts for diminishing returns. And so in market cycle 3, this was 100x return. In market cycle 4, this was about a 20x return. And so if we continue this pattern down, then we might be expecting something like a 5x return, because this is minus 80%. And so if we minus 80% again from here, then we're going to be somewhere around the 5 to 10 or something like that. So yeah, maybe somewhere around this 10x, 5x to 10x sort of range would be consistent with this diminishing returns trend. And I think that almost everyone is on board with the idea that we can't consistently have 100x returns every market cycle, and that we should expect a law of diminishing returns, or a power log, to play out. And so yeah, I just think that this is an interesting one to bring attention to. Now to flip bearish a little bit.
Wait, but before you transition,
Yeah.
I wanted to ask, what does it take, like specifically, what's your invalidation on your macro bearish view? Like, is there a level? Is there a series of events? What is it that would flip you to go, all right, I'm not going to get my 25K. If I want any more Bitcoin, I need to buy at this price.
Yeah, that's a really interesting question. For me, the invalidation is going to be this MACD, right? So if this blue line curves around on the weekly or the monthly, right? So you can see the monthly is already turning around and turning bearish again. So on the weekly, I'll accept weekly, but I prefer monthly. If this blue line starts turning over and then crosses above, or at least trends towards crossing above this orange line with velocity, that'll be my invalidation. But right now, the trend is down, right? And generally, it trends down for quite a while. And I said it to myself. I remember during the peak over here that this is a very bullish trend. And when we started crossing over, I was like, okay, you know what, maybe we are headed to to new all-time highs. And it tried to fake me out here, I wasn't trading this because by this stage I was busy with other things. But the point is that when this turns over and starts dropping, I get bearish. Over here, if I was being consistent, I guess I should have been, bullish this whole time. But when this crossed over and started turning bearish here, I basically have stayed bearish because I wanted this to cross beneath zero and start turning negative. So that, I felt like there was some room to the upside to move. I think that this move here where we didn't cross negative and we started, this bull cycle early, is why I'm, I feel like we haven't really paid our dues down here yet. And in a way, that is what this chart from Ben Cohen is demonstrating, right? It should have been around about here, but we started to move sideways or go down before rallying higher. And instead, we sort of jumped the gun a little bit and stayed up here for too long. But maybe just moving sideways here is compensating for that. I don't know. But yeah, to answer your question, like I will become bullish again when we cross negative and start turning around, or on a longer time frame, even if just this fast moving average turns around and starts to move above the slow moving average again. That's kind of what does it for me. And in
Mark,
general,
I want to just remind you really quickly. I know you have a hard stop. It's in 7 minutes. Just to keep an eye on the time.
Yep. And in general, I prefer the RSI to be down here, right? Somewhere between. Generally, I'll prefer the RSI to be, in the massively oversold region. But I'll take something nice and stable in this region, and trending up is generally when I get bullish. But yeah, these kinds of patterns to me look like bearish reversal patterns, and until those things turn around and I see a bullish reversal pattern, I tend to stay bearish.
Fair enough.
But yeah, having said that, if Ben is right, this is just going to keep heading higher. I wouldn't be surprised if we come down and start playing around with the bottom of this chart a little bit before moving up to this all-time high. So if I was going to guess what this pink trace might do, I think it's going to cross basically through here, or even continue down a little bit, and then sort of come up and then stop somewhere beneath this green trace in terms of ROI. And I think that that's a pretty reasonable perspective that most people would agree with. I understand that there are people who are expecting Bitcoin to explode to the upside and get some of these 100x or 200x returns back. I think that those days are behind us on Bitcoin, but that's okay. If you have that perspective, you are welcome to it.
There are also those that are saying that the cycle's over too. So
there are I don't think the cycle is over. And I have heard people say that as well. But no, I think it's way too early. Like the Bitcoin halving really kind of just happened. Yeah. Way too premature. I don't think that we'll see like huge gains. But yeah, I think that it's very possible that we still have all-time highs in front of us. Just might take a little while to get there.
Yeah.
Okay. Well, and let's talk about what that means in the face of an oncoming recession. I just found out this is a Twitter. I just discovered this Twitter account recently. But they're pretty good. It's very data centric. I'm learning a lot about sort of the indicators that I haven't heard of. For example, this thing called the SARM rule, which checks out. This is something that it seems really obscure, and I've never paid attention to it. Maybe Keith has heard of it before. But it's basically tracking the moving average on U.S. unemployment. And so far, it has predicted 9 out of 9 of the last recessions. And it's just flashed a warning signal just recently, about 24 hours ago. And so if we take this, as a leading indicator of an oncoming recession, then what does that mean for the market? And whether or not we get a full soft landing or a hard landing, I think is yet to be determined. But I think that it's even interesting to see the conversation now. Almost everyone is expecting the recession. Not about whether or not we get one, but that it's now basically certain, and everyone's just trying to be as well positioned as they can to protect themselves from sort of downside during that recession, and wondering how long it's going to last. And what's interesting is that if you have a look at how Bitcoin performs in certain market conditions, it responds very negatively to recessionary environments. And so there's a couple of things to look at. So this is a much longer thread about the 2-year Treasury yield, again from the same Twitter account. And what it's basically pointing out is that when the 2-year Treasury yield is trending up, this is when Bitcoin is extremely bearish. And when the 2-year Treasury yield is trending down, Bitcoin gets extremely bullish. And in a way, this is probably the best correlated, market versus, T-bill chart that I've ever seen. I've never actually seen the heads up, T-bill versus Bitcoin charts before, but this is really, really interesting. And so what, now that it looks like the interest rates are coming down, doesn't that mean that we're expecting a huge rally on Bitcoin? And the point of this thread is basically hold your horses, because when the interest rate is coming down during a recession, the Bitcoin price follows the interest rate. And so it's not enough at this point to point out that the interest rates are going to be coming down. Because if they continue down into a recession, historically the Bitcoin price has followed it. And so that's an interesting thing to note. And it doesn't just follow it, a little bit. It's catastrophic. This is the COVID recession that we had. But interestingly, even though this was a catastrophic drawdown for Bitcoin, it bounced back from this very well, coming out of the recession and then taking it to not just new all-time highs, but like really high all-time highs. And so this is the kind of thing that I'm looking for. When I said that I think we're going to have a 50% drawdown followed by something else, I didn't necessarily mean that it's going to be the end of the game. Like if we do have a drawdown to something like this, 35K level, or this 39K level in this case where I've drawn it here, let's go down to 35. I don't think that this is going to be cataclysmic. After this, I would expect, a recovery like the one that we saw in 2020. And, if that's the thing that has to happen before we get to new all-time highs, I just want to point out that it wouldn't be the first time that we've seen it. Just coming back to Ben Cohen's chart here, that 2020 recession was this one here, right?
But that was also COVID, right? So,
Right.
so here's my question about the recession. Is this time different?
No, it never is. And that's kind of my point, is that we say, oh yeah, okay, but it's COVID, but sure, maybe this will be even worse. This might be the Elon Musk recession, right? Where all of his companies finally claim their toll on the global economy. Or it could be the AI recession. This could be the next dot-com bubble. Like all of these things happen and people attribute something to it causally, retrospectively. And I think that there's always going to be a convenient handle for it. I do think that we're heading into a recession. I'm not sure how bad it's going to be. It could be relatively soft. It could, I think that the COVID recession in particular was quite violent, partly because it was unexpected, and also because, that there were very literal reasons why people, couldn't show up for work, and the economy was contracting in a very profound way.
But it was also relatively short, right? It was violent, but it was
very short, very, very short. Thanks largely to quantitative easing, and like the
there's a magic word or two words, the magic phrase.
Yeah.
So
And
that's and this may be for another show because we're full on time, but that's something to consider, right? We know that we're going to have cuts coming, right? Now, the concern is unemployment going to continue to spike the way that it has in previous situations? And you're saying this time's no different, so it likely will, right? And how does the Fed get that back under control? QE. So is that on the table for 2025?
we will see. If it's a Republican government, I think that it will absolutely be on the table because we already know, like especially if it's a Trump government, they they're not bashful at all about money printing. Not sure if it's Kamala Harris. I don't really know. Like I think in general, American governments just like to do this, and it's important to remember that it's actually Congress that decides where the debt ceiling is, and how much money printing and stuff is incapable. So I don't even know if it matters whether or not we end up with a Democrat or a Republican president at this stage. But I think it will be on the table for sure. It's a tool that the US likes wielding. So let's wait and see.
Thank you guys so much.
How come
It is the top of the hour.
the thought that we ended this one on, like normally I finish these calls and I'm like, yeah,
Politics?
that was awesome. This is a great call, but we just ended right when we ended the last rate. I just threw up in my mouth a little.
I always avoid. I come from the bar business, right? So it's like we don't talk politics and things of that sort. And so I'm just holding my breath because I know Mark is a little outspoken on all of this. I love when he says it doesn't matter if we end up with a president. He's an Australian talking from Ireland about our president.
President of the world. Everyone knows that to be true. What happens in the US affects the entire world.
This is true. It is true. Well, thank you to all of our viewers. Thank you for everybody who attended the call, live, the recording, both for sure. Keith and Mark, you guys are awesome. Thank you always. I definitely look forward to next week. Keith, sorry about the flavor in your mouth here at the moment. But we'll go rinse it out.
I'm going to go grab a mint. I'll be fine.
Thanks, you guys so much. Of course. We'll talk to you soon.
Have a great week, everybody. Thanks.
You too. Thanks. Bye, guys.